that I know you've all been waiting for, the W-4 form. But before we get started, you'll be required to have a copy of the W-4 form, which you can download from the internet at irs.gov, a calculator, a blank piece of paper, and if possible, a copy of your most recent pay stub. So hit pause while you collect those items. All right, let's jump right in and get started. When hired by an employer, you will be required to complete a W-4 form. The W-4 form is used by taxpayers, that's you, and tax-exempt organizations to report financial information to the Internal Revenue Service. It is also used to report income, calculate taxes to be paid to the federal government, and disclose other information as required by Internal Revenue codes. At the end of the year, your employer will report all wages paid and taxes withheld on the W-2 form. It is important to note that although your 1040 indicates money that was withheld during the year, it really indicates money that you overpaid to the government during the year, who, by the way, used your money as an interest-free loan. What most people fail to realize is that human resource managers are not trained on how to properly complete the W-4 form, resulting in you losing money during the year. For example, when I was in the military, I had questions about the W-4 form. I was simply told, just put down how many dependents you have. Again, just because someone works in the HR department, is a tax preparer or CPA, does not mean that they are financially literate. What you learned here today would not only put more money in your pocket monthly, allowing you to chop down your debt faster, it will also allow you to shelter more of your money as well. We're going to start in the upper left-hand corner where it says Purpose. Complete Form W-4 so that your employer can withhold the correct federal income tax from your pay. Consider completing a new W-4 form each year when your personal financial situation changes. That means every time something significant happens in your family, you get married, you get divorced, you buy a house, you sell a house, you're supposed to go into MyPay or your online system if you're a civilian and change your W-4 form. See, the government is not going to tell you this. It's your job to know this already. You may update your W-4 form as often as possible. Also keep in mind that these numbers that we're going to discuss on the W-4 form, they change slightly each year. Speaking of allowances, let's understand the difference between an allowance and an exemption. An exemption is nothing more than the amount of people whom you claim in your Form 1040 tax return, and an allowance is the number of people whom you claim on your Form 1040 plus your number of deductions. The scenario we're going to use today is a married couple filing jointly with two children ages 5 and 8. One working spouse who earns $70,000 per year, and they're homeowners. You will use your own situation on each line. And if a line does not pertain to you, please put 0. I do not want you Jimmy rigging anything. If you and your spouse both work, you are required to complete the W-4 form. Both of you all are. Let's take a look in the upper right-hand corner at the paragraph that's titled To Earner or Multiple Jobs. It says, if you have a working spouse or more than one job, figure the total number of allowances you are entitled to claim on all jobs using worksheets from only one W-4 form. Your withholding usually will be accurate when all allowances are claimed on the W-4 form for the highest paying job and 0 allowances are claimed on the others. In other words, the person in the highest tax bracket should claim the most allowances. That's what that's saying basically. Both of y'all got to fill it out, but the person that's paying the most is getting hit the hardest, so that's who should claim the most. For example, if your combined household allowances is 18, one spouse can claim 9 while the other spouse can claim 9, or one spouse can claim 18 while the other spouse claims 0. As long as the total allowances of both spouses' W-4 form does not exceed 18, you're good. That's what that's saying basically. So let's jump right in and get started with line 8. Line 8 says, enter one for yourself and no one else can claim you as a dependent. In our scenario, our spouse makes $70,000 per year, so no one can claim them as a dependent. Therefore, we enter 1 on line 8. Line B says, enter 1 if you are single and have only one job, or you are married and have only one job and your spouse does not work, or your wages from a second job and your spouse's wages, or a total of both are $1,500 or less. Again, we only have one working spouse, so we enter 1 on line B. Line C says, enter 1 for your spouse, but you may choose to enter 0 if you are married and have either a working spouse or more than one job. Entering 0 may help you avoid having too little tax withheld. Now, that's tricky. There are 3 times in this form the government is going to give you a deduction and attempt to take it back from you. Why? Because the government wants to keep most people ignorant, afraid, and scared. Line C clearly states that if you are married, enter 1 for your spouse. However, the form attempts to guide you to enter 0. Enter what you authorize to have. Don't give the government anything other than what they're supposed to have, legally, morally, and ethically. By entering zero, you're authorizing the government to take more of your hard-earned money during the year. We don't want to do that. Since our taxpayer has a spouse, we will enter 1 on line C. Line D says, enter number of dependents other than your spouse who claim your tax return. If someone lives with you and you pay for their living expenses for more than 6 months, they are your dependents and you can claim them. In our scenario, our taxpayer has 2 children, therefore we enter 2 on line D. Line E says, enter 1 if you file as head of household in your tax return. See conditions under head of household above. There's only 1 of 5 ways you can file your taxes. Married filing jointly, married filing separate, single, head of household, or widow. That's it. Let's take a look at the paragraph above in the center column titled head of household. Generally, you may claim head of household filing status on your tax return only if you are unmarried and pay more than 50% of the cost of keeping up a home for yourself and your dependents or other qualifying individuals. Since our taxpayer is filing married filing jointly, we will enter a 0 on line E. Line F says, enter 1 if you have at least $2,000 or dependent care expenses for which you plan to claim a credit. Note, do not include child support payment. Since the children does not attend daycare, we will enter a 0 on line E. Line G says child tax credit. If your total income will be less than $65,000 if you're single, $95,000 or less if you're married, enter 2 for each eligible child. Then less 1 if you have 3 to 6 eligible children, or less 2 if you have 7 or more eligible children. But if your income is $65,000 to $84,000 if you're single, $95,000 to $119,000 if you're married, enter 1 for each eligible child. Our taxpayer in our scenario earns $70,000 and has 2 children, so we would enter 4. Yes, that's correct, 4 on line G. Line H is very important. It says add lines A through G and enter the total number here. Now watch this note. Note, this may be different from the number of exemptions you claim in your tax return. We covered that earlier, the difference between an exemption and an allowance. That means you will be claiming more on this form than you will be claiming on your tax returns. That number will increase as we continue to fill out page 2 of the W-4 form. The second half of the page, which is the employee's withholding allowance certificate, is typically the only part of the form that you will receive from your employer. Before we get started on page 2, let's recap again the net income difference between a W-2 employee and a home-based business owner. These numbers, the standard deductions and exemptions, can be found on the 1040 form in the back page of the W-4 form. It is important to note that these numbers change annually, the exemptions. In this example, we have 3 married couples with 2 children each. They all make $70,000 per year and they don't own any real estate. Their standard deduction is $14,800 and their exemptions are $11,900, which totals $26,700. For the first couple, we're going to take the number. We're going to take that number, subtract it from the $70,000, which gives us $43,300. This is going to be couple number 1's taxable income. Couple number 2 has a part-time job and earns an additional $5,000 per year. Their taxable income is going to be $48,300, which is $5,000 more than couple number 1. Listen, neither couple can shelter their hard-earned income because they don't own a business. Now let's take a look at couple number 3. This is you. They decided to start a part-time home-based business and made an additional $5,000. They are entitled to receive 400 tax deductions. Now let's cover a few of the deductions. Business deductions in terms of mileage. We talked about adding up your meals, your entertainment. These are the things you're going to be able to write off. So in this example, we're going to calculate everything came up to $25,000. So we're going to take that $25,000. We're going to be able to write that off and add that to your back page of your W-4 form, the $25,000 for your business. And this is an example. You're going to spend this money anyway. It can be higher. I'm just giving you this as an example. Now let's go to page 2 of the W-4 form where it says deductions and adjustments worksheet. You will use your own situation on each line as well as what we did for part page 1. As I stated earlier, if a line does not pertain to you, I want you to put 0 on it. Line 1 says use this worksheet only if you plan to itemize deductions or claim certain credits or adjustments to income. Enter an estimate of your 2014 itemized deductions. These include qualified home mortgage interest, charitable contributions, state and local taxes. On the top portion of the form or on a blank piece of paper is where I want you to put all your information. Our couple has a monthly mortgage payment of $1,450, which totals $17,400 per year. Most mortgage payments include your escrow, such as principal, interest, and insurance payment. However, you are only authorized to claim your interest and tax payment. For this example, we're going to subtract $1,400 for principal and insurance payment. That will leave us a total of $16,000 for taxes and interest. Now, whatever your mortgage payment is, I want you to take that number and multiply it by 12, and then deduct your principal and insurance payments. If you don't know the amount of your principal and insurance payment, estimate that 1% of your annual mortgage payment will go towards principal and insurance. The government only requires estimates, so don't panic if you don't know your actual numbers. As I stated earlier, our couple's annual interest and tax payment totals $16,000. If you don't have a mortgage payment and you are single with no dependents, use the business expenses only of the $25,000 for the example we just covered. Our couple also claimed $25,000 for their business. During the year, our couple gave $2,000 in tithes and $499 in donations to the Goodwill. So if you go to church and you tithe, you take your tithe and you add it to your house, your $25,000 for your business, and Goodwill, if you own a business, you get to write off $499 per year to Goodwill without a receipt. So we're going to add in, for this couple's example, the $16,000 plus the $25,000 plus the $2,000 plus the $499, which comes out to $43,499. For those of you who do not own a home, you would add the $25,000 plus the $2,000 plus the $499, which equals $27,499. So on line 1, you would either put $43,499 if you're a homeowner, whatever your homeowner amount is, I'm saying for this couple. $27,499 if you're not a homeowner. Line 2 says enter $12,400 if married, filing jointly or qualifying widower, $9,100 if head of household, $6,200 if single or married, filing separate. Remember, this change is annual. So whatever your filing status is, select the amount next to it and enter it on line 2. In this example, our couple is married, filing jointly, so we're going to enter $12,400 on line 2. Line 3 says subtract line 2 from line 1. If 0, let's enter 0. In this example, $43,499 take away $12,400 equals $31,099. So on line number 3, enter $31,099. Line 4 says enter an estimate of your 2014 adjustments to income and any additional standard deduction. Again, this is only an estimate, so if you have your tax returns and enter the exact amount, in this example, we're going to enter 0. If you don't have it, it's okay, don't panic. If you don't have it, put 0. Line F says add lines 3 and 4 and enter the total. So we're going to add $31,099 plus 0, which is again $31,900. So enter that number on line 5. Line 6 says enter an estimate of your 2014 non-wage income. In this example, remember, you don't have to know the exact number. Enter 0 on line 6. Line 7 says subtract line 6 from line 5. If 0, let's enter 0. $31,099 plus 0 equals, guess what? $31,099. So enter that number on line 7. Line 8 says divide the amount on line 7 by $3,900 and enter the result here. Drop any fraction. It's very important. So you want to take the $31,099 from line 7 and $3,950. That will give us 8.3. Drop the fraction 0.3 and we have 8. On line 8, enter 8. Line 9 says enter the number from the personal allowance worksheet, line 8, page 1. On page 1, we computed 9. Whatever you came up with, I want you to put that on that line. Now you're going to see how imperative it is to properly complete this form. I've seen most people end up with as many as 25 or 40 deductions, believe it or not. For those of you who have ended up with 2 allowances on page 1, you should now have at least 7 deductions due to the deductions from your home-based business. In our example, we computed 9 on page 1, so we'll enter 9 on line 9. Line 10 says add lines 8 and 9 to enter the total number here. In this example, we added 8 from line 8 and 9 from line 9, which gives us a total of 17 on line 10. What did you come up with? Here's an article I want to talk to you about called Deeply in Debt. It's about a couple who owns $87,000 a year. It says today they are thrilled to have a baby girl, but are struggling to pay down credit card debt of more than $30,000. With a mortgage payment of $1,700 every month and 2 car payments totaling $485 plus the cost of the baby, their monthly take-home income has fallen short of their expenses by nearly $400 per month. They're failing to pay off their debt and they're adding to it. They're robbing Peter to pay Paul. It's a bad cycle. It's just getting worse and worse. So at the end of the year, they filed their tax returns. And a couple received a $5,000 tax refund last year, which means that they have been loaning the government interest-free money while they pay up to 24% on credit cards. The tax preparer went on to also say what they need to do is request new W-4 forms from their employer, which they can use to pay down their credit card debt and take this additional $400. They can pay their debt off. So basically what this means is this, is that our couple earns a combined income of $87,000 per year, yet they're falling short of paying down their bills by $400 per month. They're in a vicious cycle of robbing Peter to pay Paul, and at the end of the year, they file their tax returns and they receive a $5,000 tax refund. Wow, you know what that means? Let me ask you this. Why are they so short? Because no one has taken the time to explain how to properly fill out that W-4 form, but they make $87,000 a year. These people are robbing Peter to pay Paul when it's not necessary. They waited all year long to get something back that was already theirs. How can you possibly give me something back that's already mine? But because if you don't understand how to fill this form out, you're going to give the government an interest-free loan. Let's proceed. In this next article, it's titled Pay As You Go. To understand the financial power of the W-4, consider the case with a married employee with a non-working wife and 2 children. And they made $50,000 a year. If his W-4 claimed 4 allowances, the same number of exemptions he claimed on his tax return, his employer will withhold $414 each month for the IRS. A new W-4 claiming 10 allowances with not withholding down to $215 and put an extra $199 a month in his pocket. I said a month. That's almost $2,400 a year. Let's slide over here where it says money saver. All withholding is nothing more than interest-free loan to the government. Withhold only what you must and invest the rest for yourself. Now we're going to show you how to pump up your take-home pay. This is the most exciting part of this training, pumping up your take-home pay. This table shows approximately how much your paycheck would rise with each extra allowance you claim on your Form W-4. For the couple in this example, we use a scenario for pages 1 and 2 of the W-4 form. We said that their annual income was $70,000. So on this chart, select the second salary bracket. And whatever yours is, I want you to take that number. And we're going to take the salary bracket of $42,350 to $102,300. That's called your factor, the factor of $63. And multiply that number by whatever you got. This couple got 17 allowances. We competed on the W-4 form, which totals $1,071 per month. Our couple just received a monthly income increase of $1,071 per month. What did you come up with? This is huge. This takes effect today, the day you signed up in MyEcom. You get to go into your system at work, your MyPay, or wherever you work, and change your number of deductions in your pay system. What did you get? Isn't that incredible? I just saved this couple $12,852 in federal income taxes per year. Let's go back to page 1 of the W-4 form where line 5 says the total number of allowances you are claiming from line H from above, the applicable worksheet on page 2. Our couple computed 17 allowances. On line 6 it says any additional amount of any you want withheld from your paycheck. Now folks, this is the 3rd time the government's trying to take your money. That's huge. At this point you can go in and change that number at your job and you get that pay increase the very next paycheck. That is awesome. Here's an example of a person's LES and pay stub who just received what I call a stimulus package. He was paying $492 per month in federal taxes. I just increased his take-home income by almost $500 per month. He was only claiming 2 allowances when he should have been claiming 10. What I know, now, I know you're probably thinking, if I get my money back now, then I'm not going to get it back at the end of the year. Let me ask you this. Why would you want to give the government an interest-free loan when you can give yourself a pay raise instantly, pay off your debt, and start investing in yourself first? The more you understand on how to properly fill out this W-4 form, the stronger you're going to get at giving presentations. I look forward to building and reconnecting with you. Have a fantastic day.